On one side, we have Bitcoin treasury companies buying at an unprecedented pace, positioning for much more upside. But on the other side, long-term Bitcoin holders are locking in profits at levels that have historically marked major bull run tops. One of these groups is going to end up being terribly wrong. Either Bitcoin goes on a melt-up from here, validating the treasury buyers, or it rolls over into a deep correction, proving long-term holders right. In order to evaluate which one has a higher probability of playing out, we have to look at two key market forces that significantly influence Bitcoin's price. By the way, don't miss out on the massive discount we're currently doing on our service for our 5th birthday. This is our biggest sale of the year, where you get access to every trade we take in real time and our complete crypto trading strategy at this ridiculously cheap price. In just the past year, our crypto trades have delivered some incredible returns, including a 30% profit on Bitcoin, 36% on Solana, and even an 83% gain on Ethereum, all while keeping most of our losses limited to around 5%. We don't do such discounts often, so make sure to capitalize on it using the link below. The first major factor we need to consider for Bitcoin is the US stock market. Since bottoming in April this year, equities have rallied by almost 40%. Now, if we put Bitcoin's price on top, we see that for most of this bull run since late 2022, Bitcoin has been closely correlated to the stock market. But recently, we've started to see a divergence build. While equities continue to make new highs, Bitcoin has been lagging behind. This divergence doesn't give us a definitive answer on its own, but it does tell us that stock market investors remain confident about today's macro outlook, while Bitcoin hasn't yet reflected that same level of optimism. And if that's the case, Bitcoin could soon see a strong catch-up rally, like it did in late 2024 right here. Now, it could be that stocks see some short-term cooling off after such a powerful rally, potentially causing Bitcoin to correct as low as $100,000. But with the Fed now easing monetary policy without an imminent recession, the odds still favor more upside in the coming months. This chart shows us how the US stock market has performed across different timeframes when the Fed cuts interest rates, with the market sitting within 2% of its all-time highs, just like we saw happen this month. Since 1980, this scenario has occurred a total of 22 times. Looking out 1 month, we see there's a 50-50 chance of stocks being higher or lower, so no better than a coin flip. But when we extend the time horizon out 3 to 12 months, stocks have been higher over 70% of the time. Of course, these are just probabilities, not guarantees. But as traders, our job is to assess the odds and position ourselves to profit when the probabilities lean in our favor, while staying objective and flexible if those odds shift. So while short-term volatility is possible, the data for midterm still strongly favors more upside for the US stock market, which would be a strong tailwind for Bitcoin.